Okay, folks, welcome to Sunday Night Stock Charts Live. This is where we review the opening price action of the futures market. We'll talk about some headlines, a really crazy chart that's out there that I'm going to share with you regarding interest rates and some probabilities of rate hikes. And we'll go over the economic data, what was released last week, what's coming out this week. But before we go there, let's smash that like button. Please smash the like button, hit the subscribe button, and say hello to people. Franklin, hello. You, thank you very much, Franklin. Thank you. I appreciate that. It's been a crazy few months. Will, hey Bob, how hot is it in Hunting? Pretty goddamn hot, pal. Thank God for the pool. Uh, Around 90, I guess. Around there. I don't have my phone in front of me. Oh, my other one. It's about 90. Oh, it's not. It pulled back a little bit. Now it's only 82. Not too bad. Uh, Mr. G. Hello, Falcon. Uh, Falcon, my father-in-law passed away, and that's what Frank was referring to. So, um, thank you for the warm wishes. Clark, hello. Paul M, hello. All right, let's uh, let's kick things off with gold. I have it up for no other reason. I wanted to go over gold. We're up just shy of a quarter percentage point. Jennifer Trades, hello. And let's go to a 4-hour chart to get that higher level view than a 30-minute chart. And gold is consolidating nicely. I didn't like the closing price action on the week last week. Let's take a quick peek at, thank you, Paul. Thank you. Let's take a quick peek at the US dollar, which is declining slightly. No break of support yet. How is the audio? I worked on the audio for a good while today. That's why I was late. I checked it, and it seemed like it was pretty good. And it wasn't the mic; it was the audio setting um, on what's called OBS. It's the thing that allows me to communicate via live stream to YouTube. So I think I fixed it. Could do a little bit better, but good to hear. Jennifer Trades, thank you very much for that. I appreciate it very much. Jody, hello. All right. Well, I'm still working on it, Jen. I'm still working on it. I fixed the volume issue, and I'll tweak it a little bit more, but we'll get there. Okay. Ben, hello. How are you, sir? All right, let's do it. Dollar down. Good to see. Want to see a break here. That'll allow our gold trades to prosper. Silver. Silver finished off the week nicely last week. Let's go to a 4-hour chart. What I'd be looking for here is another breakout. And let's just create an alert. And we're good to go. So silver looking good, up over a third of a percentage point. Let's stick with commodities for a moment. We'll let the equities futures quiet down a little bit. Light sweet crude, flat. It looks as though we are going to press up higher here. So oil remains in fuego. Agriculture, taking a look at agriculture, you've been hearing a lot lately from several people. Kathy Woods is one, Mike Maloney. uh, Jay Powell talking a bit about deflation. And I think it's a what they're referencing is the decline over these past few weeks of commodity prices. And that's what they're citing as being deflationary. There's an expectation by some that it's going to continue. Why? It's because the unemployment benefits that the government is paying out, those will expire. They're beginning to expire now, but they ultimately end in September. So there's a belief out there that people stop spending. But you got to remember, there's 9.5 million job openings out there that need to get filled. So, yeah, while we may have a slight lag in spending, well, people are going to go back to work, unless, of course, the government extends these unemployment benefits and really kills the economy. So, at current, we're seeing a bit of a correction in most commodities, with the exception of oil, natural gas breaking out, home heating oil. Possible lower high here. They tried to take it down the other day. I need to fill up my home heating oil tank. So if it corrects, I'm going to call up and order more. 3, here we go. All right. Abel, thank you very much for the super chat. Appreciate that, sir. Thank you. Of course, you got it. Now the dimensions, you got it. Let's take a look at equities. The Russell 2000. This is a 4-hour chart, and you can see here that we broke support on Friday, and now there was an effort to try to recapture prior support, now resistance. We'll see what happens here. This is going to be interesting. Before I continue with equities, I want to take a look at the bond market. I want to get a feel for what yields are doing. I mentioned on Thursday Night Stock Charts Live that if we were going to see a rise in the 10-year yield, expect weakness in the triple Qs, in technology. That's exactly what we got on Friday. And I even went over on Thursday night. The price action on the trip Qs was not favorable. Yes, we hit all-time highs. Can't take that away. The however is that there was no conviction. It was just not conviction buying. They were fading the rally. And sure enough, yields spiked up higher and the Qs came in. That's not a trend. The however is that if yields continue up higher this week, the pullback on tech may continue. But right now, we're not seeing yields press up higher. In fact, if at best they're flat, at worst they are down slightly. So we'll see how this plays out. Now let's go back to equities. S&P 500. New weekly highs today already. New all-time highs. Where's my NASDAQ 100? Where are you? There we go. The NASDAQ 100. Flat on the session. I want to know if we break this support level. Yeah, we're good to go. We'll leave it there. The Dow up off the session highs. 30-minute chart. Bit of a reversal bar here. We'll try to save a few minutes and come back here prior to logging off and take a look at how we settle out on the futures. I just want to take another quick peek at gold. These rallies have been fading of late, so it's holding gains, which is good to see. Larry, hey brother. Some say the rally in junk bonds, falling VIX, and falling Treasury yields, all the signal a higher stock market this coming week. So let's go back to the S&P 500. Well, we already have this evening a new all-time high, at least on the futures for the S&P 500. Could we hit 4,400? You know, anything's possible. It's a pretty big move, but anything's possible. I think that what you need are really flat yields, so that way you get the large cap tech names along with oil, transports, etc., all joining in a broad-based rally that could push it up that high. But I think it becomes a lot more of a challenge if you see the 10-year yield break out on a weekly time frame and you see tech pull in. It doesn't mean the S&P 500 can't move up higher. It just means that there's going to be an anchor on the feet of the S&P 500. So I'm a little bit leery of making that 4,400 call. Now, BA, I know news was out on BA. Did they get the approval from the FAA? I think it was the FAA. I saw a headline come out. No, FAA denied Boeing permission to move forward in certifying 777X due to serious flight test incident. So we may get a little bit of pressure on Boeing, if anything. Okay, back to the futures. So we'll keep an eye on the Dow to see if Boeing acts as an anchor. It doesn't appear as though it really is, or will. What else we got? I think we covered it. Let's take a look at what we normally do at the beginning of each week, new trading week. We want to level set, and we don't want to be the guy that says after the market breaks that we don't know why the market broke. Maybe it's because of valuations. No, we're going to talk about valuations now, and they're going to become more and more important. And I'm going to go over a chart in a moment, and I'll explain why. The Buffett indicator, we remain going into the new trading week strongly overvalued. We are well above a 2 standard deviation move. Here's the historical norm. We are probably at a 3 standard deviation move, and a 2 standard occurs 2% of the time. This is a market that at any given time you got to expect can go down. The Shiller-PE ratio, 37.96. We continue to trend up higher. So the market going into the new trading week remains very, very expensive. So we got to ask ourselves, okay, we know the Federal Reserve. What's the reason for this rally? Ever since COVID, right? It's been free money, easy money. So if the stock market is a forward-looking pricing mechanism, at what point in time may they begin to calculate in a new move by the Federal Reserve? And here's a chart I was referencing. And I think it's important, before I go into this chart, to illustrate to you where we're at on a 100-year view of the Dow Jones Industrial Average. I believe I went over this last week. This is a quarterly chart. Remember, the quarter ends this month, a few days. And we are trading above the upper band of the rising 100-year rising uptrend channel. And we have valuations of the market at ridiculously overbought levels. But the question is, why is the market here? We've already answered that. That's because of all the stimulus, right? But something's beginning to change. You're having a conversation that changes, and I don't think that you're seeing many that really believe too much in a Fed rate hike, and I don't believe in it at all. But at some point in time, you're going to get people that buy into the Federal Reserve having to raise rates, and they're going to adjust their portfolios in advance of that move. So back in January, this line here in gold, the timing of the first rate hike, the expectation was for April of 2024. Now the expectation is for, say, December of 2022. Still a long ways off, but the trend is everything. Obviously, the expectation for tightening is growing more and more closer. And the number of rate hikes, which has been declining, has now leveled off. And it appears as though with this W formation here, we may begin to tick up. And that's the number of rate hikes within a 12-month period after the first rate hike. So in short, they're expecting 3 rate hikes. Now, let's say they do a quarter-point move each, right? That's 3/4 of a basis point. That's nothing in comparison to where we should be in terms of normalization. So while this sounds really, really scary, in historical terms, it's not. It's nothing. It's zero, nothing, nada. So the markets don't see it that way. Even the conversation scares the market because they know the why of why we're allowed to have valuations like they are at current. And if you disrupt the narrative, that is that easy money forever. The punch bowl is full. It's loaded with alcohol. We have plenty of heroin to inject into the system. God forbid they threaten to take away the needle and the punch bowl. Look out below. So this is the pin, potential pin, one of them anyway, besides geopolitical risks that are rising, that could ultimately pop this bubble in valuation and this bubble on price. But as we converse tonight, the S&P 500 has put in a new all-time high on futures anyway. Therefore, the path of least resistance remains to the upside. Simple as that. Now, going over economic data, you got it, Joseph. The economic data last week was mixed at best. A lot of Fed heads out there. Good copping, bad copping. GDP revision unchanged. Initial jobless claims, another big miss. Durable goods, missed. The PMI for services came in with a beat, and the manufacturing index came in with a miss. Not what you want to see. Let's take a look at the next week's economic data. Fed heads, of course. This is jobs week. Okay, so on Friday, let's just jump to it. On Friday, we have the pimp Mac Daddy of them all in terms of economic data. That's non-farm payrolls. Average hourly earnings, you got to watch that. If that spikes up higher, which it should, remember, small businesses are competing with Federal Reserve. Well, yeah, Federal Reserve too. They're financing it. They're competing with the federal government for wages. Think about it. You're a businessman. You're paying taxes to the federal government. The government's taking those taxes and giving them away to people not to work and make more money. Then you have to jack up your wages to get people back into the workforce. It's crazy. It's absolutely nuts. But here's where we're at. This is going to be a very interesting report. Before that, though, we're going to get the ADP. That's like a preview report. Many times it doesn't match up with the non-farm payrolls, but it's always an interesting read. Chicago PMI, not huge. Initial jobs claims, very important. ISM Manufacturing Index, important. Construction spending, but of course, non-farm payrolls. Again, that's the pimp Mac Daddy of them all. So very important economic data coming out this week. Let's, I don't have much other to go over. Let's see if they put up any new headlines on Zero Hedge. Wonderful. Okay, I'm going to share this this link. It's worth reviewing. I know I blew through the chart. If you want to read it at your leisure, there's the link to Zero Hedge. And nothing else to go over. You don't really go over Bitcoin. Bitcoin was up earlier. And we can see, wow, big move up high here. Big move, up over 6%. Bitcoin looking very good. Let's check in with gold again. Are we gaining here? No. No gains. Okay. Let's do some chart requests. I have to go over Gush, LABU, FAS, the banks. All right. I just got to check the members dashboard to see what they've entered. Sorry, I should have been ready. Jason. FTOC. PSFE. Let's go to, we have Able, NNM, and DM, bin, root, okay, VIAC for Randy. Thank you, Randy. Appreciate the condolences. Thank you very much. He was a really good guy. He was a really good guy. Clark, Fannie Mae, they're going bust. Hope you don't own it. All right, let's do it. Folks, we're going to be using TrendSpider Automated Technical Analysis. I'll save you the jargon if you want. Artificial intelligence, algorithms, the stuff that the big boys are using, but for retail, this is for you. So automated trend lines, multi-time frame analysis, and seasonality, and the best trade alerts in the business. 35% discount code below. Take advantage of it. Use that link, and they have a tour. You can take a tour. 7-day free trial offer. I give it away free to silver and gold level members. Let's get to it. All right. So oil is looking really good. Gush looking outstanding. Let's go to our weekly charts first. Look at this consolidation. Gush is a leveraged ETF for oil and gas exploration. We are getting ready for a continuation breakout. So Gush looking rock solid. Ideally what we get here is a retest of last week's breakout point. we'll keep this active for, I don't know, 14 days looks good. Daily chart. It's a great chart. I mean, there's nothing not to like here with the exception of volume. Volume could have been better on Friday. Gosh, looking strong. Weekly breakout looks serious, and it's probably going up higher. What else do we have here? LABU. I discussed this with members on the week ahead commentary yesterday. Falcon, thank you very much. I appreciate that super chat. Thank you very much. IHT, you got it. You know what it is? I see so many symbols being discussed in the chat. I'm not sure what's being requested and what's being discussed. So forgive me if I miss. It's great to see the communication in the chat, but it gets a little bit confusing sometimes. So thank you. I appreciate it very much. LABU, bullish key reversal bar last week. Love the breakout above the prior week's resistance. I think we're going up higher here. Clearly a breakout. Boom. We're going to do the same thing. We had a triangle formation. And if we get a touch, bounce, we'll keep some sensitivity on there. LABU. All right, we'll keep this active for a while too. We're good to go. Daily chart. Beautiful breakout. I mean, we broke out on Thursday, and we did a retest on Friday. So what you're seeing here, this 2-bar setup, is what I'm looking for on a weekly time frame. So what I want to see is a quick pullback, retest, and then a continuation move up higher. On that retest, we nibble on a trade, then we add more on a breakout. So LABU looking rock solid. The banks, folks, I got to show you this chart of the banks. Okay, so you want to know where my head's at with the banks. It's this. All the money center banks pass the stress test. B, they are allowed now to pay out dividends. C, they're going to be buying back their own shares. And here's the 10-year yield. What are you doing to me? I'm live. Don't embarrass me. There we go. So you can see here that we are beginning on a weekly time frame, 10-year yield, we are beginning to break out. And for those not familiar with what the significance of that is that you got to know the correlations of what you're trading. So if you're going to trade gold, you got to keep an eye on the dollar. If you're going to trade the banks, you got to keep an eye on the 10-year yield. So the banks have been weak for several weeks now. They were leading, then they began to lag. They corrected. No big deal. They got extended. But also, the 10-year yield pulled back. So that was the pin that caused that correction. That changed last week. You had a nice move up higher on the banks, and you had a move up higher on the 10-year yield. Why does that matter? There's an acronym, NIM, net interest margins. They make more money on their loan portfolio when interest rates go up higher. It's free money to them. So their profit margins expand when yields move up higher. So any move up higher on the 10-year, especially if we take out the highs of, let's use 1.57, because we had a higher high the week of the 14th than the prior week. Actually, it was on par. It was par. And that 1.57 mark, if we see a breakout on the 10-year yield above 1.57, expect the banks to have a continuation breakout move. Back to the banks. FAS, this is a leveraged ETF, putting you long to the banks. If you don't want to trade a leveraged ETF, just go with the XLF. XOK's technology. Now, this is a weekly chart. Beautiful inside week last week. I mean, the prior week was just an annihilation. Last week, done. Bottoms in. So the only problem here, I'm going to take this off. I'm going to throw it back on. These are the automated trend lines. I'm using a weekly chart, but I'm going to overlay on the weekly chart the monthly resistance levels. That's the power of automated technical analysis. So just keep in mind that we closed at 111.87. We're going to have resistance on a monthly time frame at 117.19. So just keep that in mind. Doesn't mean it can't be bought. It just means that we have resistance above. We got to respect it. Daily chart. Again, the automated trend lines. Time saver. We broke out on Friday. Beautiful. We're going to create an alert here. And we will keep that active for a few days. I should change that sensitivity. I'll change it later. I won't bore you. I should have reduced the sensitivity a bit more. I'll change it later. So the banks looking very good. Oh, Falcon, IHT. Oh, this is the REIT. This is a yielder, right? Not much of a yield. Okay. Okay, so let me go to a monthly chart first to get a feel for. Okay. The high was 1477. We closed at 666. Woo. Okay. So we're technically still overbought here, right? On a monthly time frame, we closed out the week last week above the third standard deviation Bollinger Band, and the market is telling us that there are a lot of sellers above. Are they done selling? We'll check out volume in a moment. Daily chart. Not a bad week last week. We reversed to close off the lows of the week. This is obviously a stock that remains under pressure and it remains overbought. So at a bare minimum, what you're going to want to see is the stock stop going down, right? The low of last week is what? 665, thereabouts, give or take a penny? 666. So you don't want to see it make a new weekly low. You have a wedge formation forming here. Ideally, what you're doing is that if you're going to nibble here, fine. Just use a tight stop, but wait for the breakout. No sensitivity. And we'll keep it active for a couple of weeks, few weeks. And you're good to go. Here's the chart for you, Falcon. Hey, Big Bear. How you doing, buddy? Daily chart. So on a daily time frame, you had a gap up higher on. Let's change this. This is not looking right. Now to the daily chart. You had a nice pop-up higher above these moving averages. The 21-day moving average. Nice breakout here. You may get a retest of the breakout point at 738 to 740 thereabouts. So it looks like we're starting to see some improvement on IHT on a daily time frame, weekly time frame. Just keep in mind that you're going to have resistance here. At 818 per share. Beyond that, you're going to have resistance at 878. But after you get through that, this upper band here, which was prior support, automated trend line, is now going to act as your rising upper band of resistance. So what you can do here is that if you're intent on staying long with this for a while, is just create an alert, touch, bounce, keep some sensitivity on it. So that way, once you hit it, you can start scaling out a little bit, wait for a pullback, and keep it active for 60 days. So that's how you use the trend lines. So once we get through 878, off to the races, and that monthly overbought condition on the Bollingers, remember, we're going to be going into July at the end of this week. So you're going to have a new bar opening up. So that may cure this overbought issue in and of itself. So I wouldn't worry too much about the monthly overbought situation. It'll get resolved in early July. Hopefully that makes sense. NNDM. Nano dimensions. I already have alerts set up here for this. And one fired last week. So now we're going to recreate this. Actually, you know what? We'll wait for the weekly chart. The monthly chart, beautiful. This is a breakout. Assuming that we close where we're at or better, ideally you want to see it close above 821 per share. That's critical now support. Weekly chart. So what we want to see here is if, Devin, thank you for the super chat. OTRK, you got it, brother. Thank you very much. If you get a pullback, and this is what I wanted to do early with that other alert I set, I want to minimize the sensitivity. Oh, I messed that up. Good. We're going to have a little bit of resistance right here at around $9 a share. We sold off there a little bit last week. Let's go to the daily chart. The daily chart looks good. We broke out. Here's the power of the automated trend lines. Take them off. Here's your breakout. It's pretty consistent with where I drew my line. We broke out on the 23rd, retest on the 24th, continuation move higher on the 25th. I don't think that you're that far beyond the buy point here where you couldn't act and at least nibble on the trade. Me personally, to initiate a trade, I'd like to see a pullback and a retest, but that's just me. So it looks as though the path of least resistance here is changing, and it's probably going to move up considerably higher. So NNDM bullish. OTRK. Let's go to a monthly chart first. I gotta get a feel for where we've been. Put the log on. All right, so I'm going to take the trend lines off, and I'll show you what happened here. We hit the resistance levels, double topped out, then gap down. Could be on a news item. I don't know. It doesn't matter. That's in the past. We're worried about the future. So we bounced off of support. We're consolidating an attempted breakout on the month, but we were rejected somewhat. Not totally, though. We're still there holding that breakout, but we have a couple of trading days left to go in the month. Weekly chart. Nice consolidation. You have a higher low here on a weekly time frame, which is good. The automated trend lines are telling you, yeah, you have support here in blue, but you also have resistance up here in red. So I don't think that this is a bad place to initiate a trade. Would I get big here? No, I would not. But I would start getting bigger on a breakout above this resistance level. No sensitivity. All we care about is the close above resistance. Why is this so sensitive? Get it off. There we go. And we're good to go. The alert's set. And that price point is at $41.46 per share. So again, you're getting your higher lows here, no problem with nibbling, but the ultimate buy point is going to be close above this mark here. Daily chart, see if there's any other reason why we should be excited or concerned. All right, so Friday was not a good day, obviously. But we did hold support. All right. No rush here whatsoever. This is a buyer's stock. The time is on your side. The best thing that could happen for this stock tomorrow is a gap up. Not even a new high versus Friday's high. I'm just saying that you gap up, have an inside day, and that'll stop the momentum to the downside, because this is pretty ruthless of a sell-off, but it was on light volume. But you just don't want to see a new weekly low. That you want to avoid that, because you certainly don't want to buy a stock when it begins to make a new weekly low, unless, of course, at the end of the week, it reverses to close higher on the week. That would be great. So two scenarios. One, you have an inside day. Wait and see how it closes Monday, Tuesday. If you don't have a new weekly low by Wednesday, it's probably not going to. You may drift back down, retest the support level by the end of the week, maybe the following week. That's why I'm saying time is on your side. Now, the what if is, what if they sell it off tomorrow? What do? Nothing. Zero. Nada. Watch it. Wait for a bullish key reversal bar. What is a bullish key reversal bar? Do we have one here? Yes, right here. This is a bullish key reversal bar. They drop it down, they rip it back up. That's what you want to see here if they gap it down or move it down, a new weekly low week over week. So no rush here. Watch it for a couple of days, then you can make your move. The probability, unless there's a news event that occurs, a binary event, the probability of the stock gapping up above Friday's lows is very, very improbable. It's most likely not going to happen unless, of course, you have a binary event. That would be earnings. That would be some headline news, a new contract, whatever they do. So that's my take on OTRK. John Spencer, thank you, sir. Thank you very much for the super chat. All right, what time do we have here? 6:47. I have a couple more to get to. PSFE. Let's take the drawings off. So this is looking better than the last time I saw it. So, as always, when a stock is in a downtrend, the first thing we look for is the stock to stop going down. Check that box. We're good. Second thing we're looking for are higher lows. Check that box. And last week, we began to break out above weekly resistance. Now, this is the beginning of a W formation. So, a very good effort in an attempt to break out last week. But let's face it, there was a big rejection. And what you need to see here on PaySafe is a close above $12.80 per share. That's your buy signal. That would be a close above this W's pivot point. Daily chart. Now, this is a perfect example. I have an alert set here, right? You can see it fired off. Now, I'm not sure what time it fired off, but the key with the alerts is that when you're trading on a breakout, you're looking for that breakout, don't buy when the alert says it's broken out. Unless, of course, it's 3:55 in the afternoon and you only have a couple more minutes left to trade. Because if you would have bought the breakout here on Friday when this alert fired off, think about what would have happened. You would have had a few minutes of glory as it ripped up higher, and then the air just comes out of you. Just a gut punch. And it faded to close well off the highs of the day. So what can quite possibly happen here is that we get a continuation move lower. Because what traders are going to want to do, remember, traders are OCD, obsessive compulsive disorder. I know, I have it. They want to see a retest of what was resistance now act as support. Now on that retest, when that alert fires off, then you can look to act fairly quickly. But there's probably going to be some more selling in here. Because whoever dumped may not be done. You never know. And the alert's set. And I'm going to point something out as well in a moment. I'll share this. Okay, so know where you have resistance right here in green. Again, the automated trend line. Keep that in mind. And that alert right now, this is going to change because it's declining. Right around $12.50 per share resistance. Big volume on Friday. So this is not mom and pop selling 100 shares at PaySafe. This was an institution. It was a fund. So expect more weakness, but that weakness on light volume and a retest of support, that's your opportunity. That's when patience pays off. FTOC. Good month. Really good month. I guess this is a SPAC. So we have a bullish key reversal, not a bullish key reversal, a bullish reversal month. Weekly chart. Very nice. Very, very nice. We never got the retest. We got the breakout. That fired off. Let's see. We'll set an alert. You never know unless you set them. Look for a retest of the breakout point. Weekly time frame. And we're good to go. Now, there's not enough data here to have the automated trend lines do anything, so we're going to have to do this manually. You know, there's really not enough data here to even do it manually. I'm going to abandon this. Watch for a retest. That's the play here. Let's go to a daily chart so we can pick up any other opportunities. A setup, yeah. Definitely wait for a pullback here. What happened on Friday was that they gapped it up and into the third standard deviation Bollinger Band here in red. In short, you're not supposed to be there. It can move up higher. We've seen it go a lot higher. But from a risk-reward perspective, remember, our job is not necessarily to go out every day to make money. Our job number one is to preserve capital. So when I go buying here, no, I couldn't. I just couldn't do it. So ideally, we get to pull back and a retest. That can certainly happen. So that's how I would play this. Another option would be if you wanted to, if you're dying to get in there, you know, create another alert. So I make this note, S1 of 2. That just lets me know I have a preferred support level below that I like better. So that way I'm not just trading off of this firing off of this alert. It just tells me watch it. Maybe you get a retrace back down to that support level that you really like. So FTOC is looking very good. It's a little bit extended here. I'm a bit more conservative, so I need to watch for a retrace and a pullback. Otherwise, the view here of the stock is that it's probably going up a lot higher. So it's looking good. What else do we have? Fannie Mae. Yeah, I would not put money here. I forget what happened last week. Supreme Court decision. Something happened last week. It wasn't good for Sallie Mae and Freddie Mac and these quasi-government entities. We broke not one support level, but 2 support levels on a monthly time frame this month. Weekly chart. You know, we're oversold relative to the third standard deviation Bollinger Band. I don't think it's investable. Daily chart. The daily chart, we're probing support. We hit it on the 23rd. Now we came in yet again on Friday. to do another retest. Does it hold? We don't know. But there may be some ongoing concern issues here with Fannie Mae, so I'd be very, very careful. I don't know what their structure is nowadays. I don't know if they're still buying back all these mortgages, what their deal is. But all I know is that they're in a world of hurt, and they have been for a long, long time. U.S. government is going to stay involved in Freddie and Fannie, I think. What I don't know about, I don't trade, and that these two, Fannie Mae in particular, I just don't like it. I remember the one CEO there, Claude Rains, I think it was his name. He was robbing the place blind. No jail, never went to jail. Root. You're welcome, Big Bear. Root. Forget the monthly chart. Let's go to a weekly chart. All right, so downtrend. We bounced off of support here. Again, automated trend line. Now we're putting in higher lows. You got a lot of resistance up here, a ton of it. So, attempted breakout 1 failed, 2 failed. Now they're going to probably pull it back a little bit further, get a bigger running start. I would entertain doing this. Just in case you get a sell-off in the market, I'll keep quite a bit of sensitivity on here. Now, when you really want to go adding more, is on a close above, what is this? $12.55. It was support here, it failed here, resistance here. So it's a clear and defined resistance level. You want to see it close above it. And you're good to go. Daily chart. Yeah. Daily chart was not, Friday was not a good day. You have a lot of resistance up here. So I would wait for my alert to fire off. Alerts, I should say. Why is this not showing? Let's put it on all time frames. Daily chart now. All right, so there it is. There's our alert down here. So watch for a pullback or a breakout. Either one of the two. All right. Okay. What time do we have here? Let's circle back. We're over here. Let's circle back to the futures, see how we're settling out. Gold picking up steam. Good to see. Up over a quarter percentage point now. At session highs. What's the dollar doing? Hopefully breaking support. Not yet. Not yet. But at session lows. Bond prices still up. but a bit of a fade. You can see how they're coming off a little bit, but let's not read too much into a 30-minute chart. Let's go to equities. The NASDAQ 100. We're just off of session highs, up 0.16%. It looks stable. The only thing threatening for the NASDAQ 100, the 10-year yield. If it goes up higher, you're going to probably get some weakness on the NASDAQ. S&P 500 continue to make new all-time highs on the futures anyway. The Dow approaching resistance off session highs, but still up on the session. Let's take a look at silver. Silver looking good, up nearly a half percentage point. Good stuff. I skipped over the Russell 2000. It's off session highs, but still up on this session. Okay, so a lot of economic data coming out this week, folks. It's the Pimp Mac Daddy of them all. Non-farm payrolls on Friday. So buckle up. They're also going to get average hourly earnings with that report. So watch for an inflated number. If the government is actually creating wage inflation, the small caps are not going to like that. In particular, they can't absorb that. So with that, everybody have. You're welcome, Franklin. Thanks for joining in. Jody, thank you so much. Very sweet of you. Thank you. Thank you very much. Everybody have a really profitable trading week. Enjoy the remainder of your Sunday night. Thanks for being here. Smash that like button. And everybody have a great night. Be well.